What if the real secret to becoming rich was actually boring, not flashy, not exciting, not some next Bitcoin, not a secret stock tip from a millionaire? Then why do so many wealthy people invest in something called index funds? Seriously, some of the richest investors in the world openly recommend them, even billionaires, even people who could invest in almost anything. So why do they choose something so simple? And more importantly, why are average people constantly distracted by risky investments, while rich people quietly grow wealth in the background? Because the biggest difference between rich and poor investors isn't intelligence, it's psychology. Most people think rich investing looks complicated. They imagine giant monitors, fast trading, charts everywhere, people yelling buy and sell. It feels exciting, like money is made through speed. But wealthy people learn something most people never understand. The faster you chase money, the faster money escapes you. And that's where index funds enter the story. Quiet, simple, almost boring. But hidden inside that boring system is one of the most powerful wealth-building machines ever created. Imagine this. A stickman walks into the stock market with $100. He sees one company, maybe a tech company, maybe a trendy startup. Everyone online says, this stock will explode. This is the future. Easy money. So he puts all his money into that one company. Now his entire future depends on one business, one CEO, one mistake, one bad year. That's risky. Now imagine another stickman. Instead of buying one company, he buys a tiny piece of 500 companies at once. Tech companies, healthcare, banks, energy, retail, factories. If one company fails, no disaster, because the other 499 are still working. That is basically an index fund. An index fund is like buying the entire team instead of betting on one player. And one of the most famous examples is the S&P 500. Sounds complicated, but it's actually simple. It's just a collection of 500 of America's biggest companies. When those companies grow, the index fund grows too. So instead of trying to guess the next winning stock, you own small pieces of many successful businesses together. Simple. But here's the crazy part. Historically, most professional investors fail to beat the market consistently. Think about that. People with expensive suits, massive offices, finance degrees, years of experience, many still lose against a simple index fund over time. And rich people know this. That's why they stop trying to be heroes. Because wealthy people don't just think about making money. They think about keeping it. See, average investors often want excitement. They want fast profits, quick wins, a lucky break. But rich people, they value peace. Imagine two investors. One checks stock prices every 10 minutes. He panics during crashes. He gets excited during hype. He loses sleep constantly. The other invests consistently into index funds. Then goes back to living life. Who sounds wealthier? Exactly. Real wealth often looks calm, and that calmness matters more than people realize, because emotions destroy investors. Fear, greed, impatience. These three emotions quietly keep millions of people poor. During market crashes, average investors panic sell. They see red numbers. They get scared. They run away. Then later, the market recovers without them. Meanwhile, rich investors often do the opposite. They stay calm. Some even buy more. Because they understand something powerful. The market goes up and down temporarily. But historically, over long periods, it trends upward. That long-term mindset changes everything. And this is where compound interest becomes almost magical. Imagine a tiny snowball rolling downhill. At first, nothing impressive. Small, slow, boring. But as it rolls, it gathers more snow. Then more. Then even more. Eventually, it becomes massive. That's compounding. Your money starts making money. Then that money makes more money. Then those profits create even more profits. And suddenly, time starts working for you. This is why rich people love starting early, because compounding rewards patience more than intelligence. Let's say someone invests small amounts consistently for decades, not huge amounts, just consistently. Over time, the growth becomes shocking, not because they were lucky, not because they found a secret, but because they gave their investments time. And time is the one thing most people waste. People spend years waiting for the perfect moment. I'll start when I earn more. I'll invest next year. I need to learn everything first. Meanwhile, time keeps moving, and every year delayed makes the journey harder. That's the painful truth about wealth. The earlier you understand compounding, the easier life becomes later. But most people discover this too late, because society trains people to chase excitement. Fast money gets attention, slow wealth gets ignored. Think about social media. Nobody goes viral saying, "I invested consistently for 25 years. No. People want overnight success stories, crypto millionaires, lottery winners, crazy stock gains. But rich people know something uncomfortable. Most fast money disappears fast too, because if someone builds wealth emotionally, they usually lose it emotionally. That's why wealthy investors build systems instead of chasing feelings, and index funds are exactly that. A system. Simple, automatic, consistent, no guessing, no constant stress, no obsession, just steady investing over time. And honestly, that sounds boring. But maybe boring is underrated, because the goal isn't to look rich. The goal is freedom. Freedom from financial stress, freedom from paycheck panic, freedom to choose how you live. And freedom usually comes from consistency, not excitement. This is why rich people often ignore financial noise. While everyone else jumps between trends, they quietly keep investing. While others panic during crashes, they stay patient. While average investors search for shortcuts, wealthy people let time do the heavy lifting. And here's the strange part. The biggest advantage rich people have isn't more money. It's better behavior. They understand delayed gratification. They understand patience. They understand that simplicity often beats complexity. And that mindset changes everything. Because wealth is less about predicting the future and more about surviving long enough for growth to happen. That's the hidden power of index funds. They remove ego from investing. You stop trying to be smarter than everyone. You stop gambling. You stop chasing hype. And instead, you focus on consistency. That quiet consistency becomes powerful. Year after year, crash after crash, decade after decade, the market keeps moving, and patient investors quietly grow richer in the background. No drama, no flashy tricks, no magic formula, just discipline. And maybe that's why most people ignore it, because humans naturally want exciting answers. But the truth? The path to wealth is usually repetitive. Simple habits, smart decisions, long-term thinking. That's what rich people truly understand. So, the next time someone promises easy money, ask yourself something important. If getting rich quickly works so well, why do wealthy people keep choosing slow systems like index funds? Maybe because they already learned the lesson most people never do. Wealth is not built in moments. It's built in years. And the people who win financially are usually the people who stay patient while everyone else gets distracted. Because in the end, the stock market is less about money and more about behavior, and the people who control their emotions often control their future. If you want to understand money, wealth, and the hidden systems rich people use to stay wealthy, subscribe now.